Welcome back, everybody, to my YouTube trading journal. On this channel, I'm documenting all the trades I take on a 100K account and just being honest and open about the journey and the wins and losses, and seeing how that manifests out. So we did start this YouTube channel on quite a grim note. I think so far we've just lost 4 in a row trying to catch this falling knife. Which is okay. It kind of sucks. I kind of wanted to restart the whole process, but that wouldn't be honest. So the honest truth is we went down -5%, taking 4 losses, and now we have to work our way back from being in drawdown, which is not ideal start, but at least it shows you the honesty of the journey and how trading is full of ups and downs, and it's not the end of the world when you go into a little bit of drawdown. That happens as long as you have probability of a positive outcome after a large sample size of trades, you'll be fine. So in this video today, we're going to discuss a little bit about the trades and the positions we're in, and the current market state and so on. Let's discuss the current trades we are in. We have our gold short that's been playing out pretty nicely. If we take a look at it here, we shorted gold at 3,127, and it's been playing out nicely. Yesterday we did hit our first TP zone, so ideally I would have liked to take profit. I would have liked to take profit a little bit, skim off at the 2,954 range, but it's okay because this account I'm trying to do more of a set and forget strategy. So on my personal, I did take a little bit of profit, and I'm actually looking to scale into this gold trade. So I moved my stop loss to the highs, and if gold comes to the 3,064 or back to actually our entry, which would suck, but it's fine because I think it will still play out. I'll look to scale into this trade. I think the gold short is looking very, very good. Just to go over the reasons why we went into this gold short and still believe it's a very, very good trade was simply the front running of the inventory of all the gold due to the tariff announcements. We've covered this in all the other videos, so if you want to know more about it, go back and check out the videos. This was our main reasoning behind shorting gold, just basic supply and demand. So our gold trade is working out nicely and has helped us come back from some of the losses. Sitting at a $2,000 profit there, which is nice, and we're going to let that just keep manifesting out into the future. Remember, our target zone was somewhere between the 12th of April and the 17th of April is where I'm looking to have my take profit zone. So if it can manifest out like this, let me just draw it in. So this is the trade we're kind of looking for. If we can get it somewhere between that and that zone, we'll look for a take profit around there. So onto the next trade. In this craziness of yesterday, when we had another 4% down on open yesterday, we took a long. It hit one of the key areas over here, so we longed the S&P 500 on that gap down yesterday. If we just zoom out a bit here, I don't normally use trend lines, but there was also a whole bunch of option flow orders over this area. So it was a very good area to try catch a bounce. And not only that, there's this beautiful trend line, one touch, the COVID lows, and then another touch. I can't remember I can't remember what this was, but 3 touches. Over there, and then we came back and we touched the trend line again, and there was a whole bunch of orders here based on option flow, so we decided it was a good time to buy the dip, and we bought the dip, and that's kind of manifesting out quite nicely here. I don't know if the lows are for certain, but this area seems like a very, very good area to start accumulating if you believe that the bull market is still on, which we still do. Reasons why I still believe the bull market is on, and regardless, even if you're just playing the dead cat bounce over here, I think it's a good opportunity, is one, the sentiment in the market is absolutely destroyed. This is COVID levels of panic and fear. And I think the Trump tariffs actually don't warrant this and will actually have a good economic outcome at the end of the day. The reasoning for this, we'll discuss it just now. But yes, reason one is the sentiment is absolutely shocking. And if you just buy at areas where sentiment like this is, you probably have a good outcome of being on the good side of the trade instead of selling all your stocks and running away. Two is the stock trading with the RSI below 30 is pretty much hitting record levels. The only time bigger than this was COVID. And yeah, we're hitting 2020 levels. So yeah, just buying when everything is oversold is probably not a bad idea. So I'm not saying that this has to be the bottom, but I'm saying it's probably not a bad idea to go a little bit risk on. Three, one of my favorite tools for portfolio management and longer term investment is your liquidity. There's a 97% correlation with global liquidity and the NASDAQ, thanks to Raoul Paul and the MacroStrategy guys for this information. But yes, so you're just in your liquidity cycle where they're about to inject a whole bunch of liquidity, and you can see this happening. You can see this happening with the dollar, just on an absolute free fall. When dollar goes cheap like this, they're going to about to send the printers. You know they have to refinance their debt. Yeah, let's discuss this actually. Why this craziness is actually maybe a strategic plan for America, and why this is probably the best outcome just to have a flash crash like this, and how it will help them. America has to refinance their debt. They have around, I think it's 9.6 to $10 trillion they have to refinance, and America has to refinance this debt. And they refinance the debt by their 10-year or 2-year treasury bills. And right now, let me just pull it up, the 10-year, sorry, yeah. So right now, the 10-year treasury bill, the bonds, is down from January. Okay, it was down more, down 13%. It was down almost 20%. If you look at the 2-year, since January, the start of this year, is also down 15%. It was down almost 20%. So on the refinancing of their $10 trillion, $9 trillion of debt, they're getting a nice, sorry, the South African term, they're getting a nice 10% discount on refinancing of that debt. So they had to, because they have to refinance that debt, and they want to refinance it at a lower interest rate. So this whole flash crash is very strategic because they save hundreds and hundreds of billions of dollars if this percentage is lower. So the refinancing of this debt has to be done this year, and them flash crashing in it and doing it at a lower percentage obviously helps them in the future. So yeah, maybe it was a little bit of a strategic plan by Trump to flash crash the economy so they can refinance their debt for cheaper. But yeah, that's a little bit, yeah, we don't know, we can't say that for certainty, but it helps them a lot having this whole stock market reset. So yeah, that's one reason why this is probably not the end of the world, because after this refinancing of this debt, we know they're going to cut rates eventually, and we know that China needs dollars and the money printer is going to go. That just brings you back to our liquidity cycle chart, where you normally see in this fall period an increase in global liquidity. An increase in global liquidity means asset goes up, because yeah, there's a 97% correlation with the NASDAQ. I mean, yeah, this is the best strategy you can possibly run behind an investment portfolio. If you can somehow have an accurate indication of the liquidity cycles and when they're about to inject liquidity, and add that into your business cycle, your PMI, you'll outperform almost all hedge funds with asset allocation. This is just the core of the game. So looking at other trades, if we're looking at the bottom for the S&P 500, I also believe that crypto is starting to look good. We haven't talked about crypto yet on this channel because I just don't think it was the time and place to take a risk like that. But yeah, we're going to start introducing more crypto into this channel because things are looking better. I personally think things are looking better. Some people think it's the end of the world. But yeah, so I also took a long on Bitcoin. Bitcoin hit one of my buy levels. It's probably gone now because it fades away. It fades away. I took a long on Bitcoin. Actually, let me try see if I can pull it up. Okay, it's not showing now. But yeah, I took a buy on Bitcoin. I'm not necessarily confident that this is the bottom. Maybe it shows on this chart. One sec. I just want to see if I can. Okay, it didn't pull it up. That's okay. This was my target. So actually on my personal account, I long Bitcoin around this area at the same time as we hit the NASDAQ around this area. And then I was just looking over and I was like, yo, we are down 5%. Bitcoin moves. So with a small amount of risk in cryptocurrencies, you can make such a big percentage return. So you don't actually need to risk that much in Bitcoin or other cryptos to make giant moves. So we went long on Bitcoin for the reasons we just discussed, that we believe that liquidity is about to come in, and this was just over exaggeration of panic and fear, and it's actually quite a good time to buy assets. So we went long on Bitcoin at, let me just pull it up. I went long Bitcoin at 78,400 with a stop loss at 66,400. I don't believe it will get quite there. But yeah, we have our Bitcoin long in, and we'll see how this manifests out. This is still very early days in this entry. And then also another thing I went long on was Dogecoin. I put my Dogecoin stop loss at 11,595. It's just underneath this low, and then there's, if you just zoom out into the weekly, there's this little bit of a fair value gap here. Maybe we come into like an order block like this into the fair value gap and then bounce. So just to be safe, I put it at the bottom of this fair value gap. And the reasoning for Doge is because if they do the Dogecoin stimulus checks that they've been talking about, because we know that, well, we don't know, we believe they're about to inject liquidity. And I don't know, last time with COVID, they injected liquidity and all of a sudden they gave everyone a whole bunch of stimulus checks. If they repeat the same process as the COVID cycle and do it through that Dogecoin checks that they've been saying they were going to do, where they give $5,000 to everyone from all the government savings, I think Dogecoin might get a little rally, especially because all the hype and attention around that. We know cryptos move around hype and attention. It's all speculative investing. Dogecoin might not be a bad one, so I went long on Doge actually today, right now. And then our last trade that we're going to cover, that we've been in for quite a while now, is the Tesla trade. Let's just zoom in so you can see where I entered. So I entered into Tesla over here, and we were getting a nice rally, and then Trump came out and told everyone that he's gonna, with his poster, he came out with his poster with all those crazy tariff calculations, and we took a little bit of pain on Tesla. But yeah, we haven't been stopped out yet. Not saying that we can't get stopped out. Hopefully this has a nice continued recovery. But yeah, we're still in this Tesla position, and we'll see how that manifests out. So yeah, that's the recap of the trades that we're in and our current kind of thoughts on the market. We're slowly making a comeback from being minus $5,000. But yeah, this is unrealized profits, so it kind of doesn't mean anything until you cut them. But yeah, until next time, follow me on X, because I post every single trade as soon as I take it on here. All my trades are here, and yeah, pretty much the only thing I post on X is all the trades. And I also post them on the YouTube place where you can post posts like X. So yeah, make sure you put the bell notification on if you just want to see my trades that I take live, and follow me. But yeah, until next time, thank you everybody for watching, and we'll see how all of this manifests out.